Yeah, welcome back. Let's go on with withdrawals. And you see here we are at the moment at 3.2. So our topic is necessary measures against an abuse in connection with withdrawals. You see here on that small chart that we have two different alternatives to end up with number one. We have first the question, is there something for consideration going on? If so, we have a genuine payment and a genuine transaction delivery against payment, and then the tax base is under 10.1, the consideration, the gross amount minus the VAT included. The other alternative is there no payment? Then fictitiously something is declared as having been for consideration, we remember that, and then the minimum tax base of 10.4 number 1 takes place. Now, these two things must be kept in mind. Now, as you see, the right part, this one, only takes place if there is no payment at all. So let's think about a trick. If a payment is made, then the rules on the left side have to be applied. Then it's no longer 10.4 but 10.1 what is paid as the gross amount. So that brings us necessarily to a great idea. What if we do not withdraw a good and give it to a friend for free as a gift, but sell it to that friend for an amount of €1? In that case, we have a different situation. Now, naturally, the effect can be illustrated if we imagine something expensive. Imagine you are a car trader. Your son or daughter has just passed successfully the last class in school. So you want to make some nice present and you think about giving a present. A new car, very good car, €50,000 plus 9,500 VAT. And now tax advisor says no. That would be a withdrawal. You would be taxed under 10.4 at the purchase price at the moment of when you make the gift. So at the moment of withdrawal. And as the price was yesterday 50,000, it would today still be 50,000. So that would you cost 9,500 value tax. Tax advisor's suggestion would be think about doing something different, because if we now give a payment €1, then we have no possibility to use the right track. So we don't end up with the 10.4 tax base with 50,000. We are forced to take the left track, genuine delivery against payment from father to son or daughter, and the tax base is €1 gross amount. That means 84 cents net amount, and trader would really appreciate that, because now he got 9.5 thousand VAT input tax refund and pays 16 cents on giving that car to his son or daughter. Naturally, that is not perfectly compatible with the sense of humor of the fiscal administration and of the guys who conceive the law. And naturally, the trick is too easy not to be seen. So somebody thinks we must do something against that. That can simply not be right. That must be cancelled. And so what can be the solution? So we need a rule which makes these maneuvers senseless. The German law said, okay, let's just look for a rule which we can apply if the consideration paid has been manipulated downwards for personal reasons. So if you have a payment, but it is not a genuine payment for business motives, but for personal reasons. For example, the buyer is my son, my daughter, a close friend. For personal reasons, I take a far lower sales price than justified. So German rule then says if that suspicion is justified, then we declare the withdrawal tax base 10.4 to be the minimum amount which is relevant in case of a withdrawal. So that means at least 10.4 number 1 is used as a tax base if we make a deal with people related to us under the personal aspect. So for this reason, in Germany, the 10.4, the withdrawal tax base, is also called, or widely called, the minimum tax base, the Mindestbemessungsgrundlage, minimum tax base. Because that means whenever you have a consideration, whenever you have a gross payment, and you have the suspicion it might be manipulated downwards because the other side is closely related, and it might be that personal motives had influenced the price setting downwards. Then we check if 10.4 brings along a higher tax base, and the higher of the two will be applied. So that this happens can be found in 10.5. 10.5 tells us when you have transactions with closely related persons, shareholders, owners' family, and so, and all other closely related persons. So we can sum it up: if you have transactions with closely related persons, then the minimum tax base has to be applied if the amount which was set as price is lower than the minimum tax base, and it deviates from the adequate market price. So that's clear. The adequate market price, if you set that, then the consideration has not been manipulated downwards, so then you have no need to adjust the price. If, let's say, a furniture shop sells a desk for 50 euro to a family member of the owner, that sticks. However, that does not cause the application of the minimum tax base if 50 euro is an adequate market price for that desk at that time. For example, if 20 others also can buy that desk at a reduced price of 50 euro, then it's clearly the proof that 50 euro is at that moment the market price. For example, that this desk has not been sold for a long time, so that we had to reduce the price, and so on. However, if the same shop offers a cupboard for an official price of 5,000 euro, then that first says nothing. Now imagine every customer can, if he or she knocks a bit on the door and negotiates a bit, obtain a discount of 25%. Then an adequate market price would be 3,750 probably, because everybody pays that. Now, if your own family member gets a discount of 50% from you, so can buy for 2.5. Then evidently the price here is not the adequate market price which you charge to others. So now the command is compare. Imagine the minimum tax base is 3,000, but the family member pays 2.5, then 3,000 counts. However, it might be, if you have a colossal profit margin, that the purchase price of the cupboard at the moment is just 1,000 euro. In that case, the price fixed was 2.5 thousand to the family member. Minimum tax base is 1,000, so the higher value counts. So 2.5 is indeed then, as a cost price, the basis for the calculation of the net amount and therefore of the tax base. So only the higher amount counts. That's relatively clear. Okay. What's a closely related person? All persons to whom the owner has a special relationship which is not founded on business. A nice general description, not very not very easy, however, comprehensive. So, with whom do you have a close personal relation? If you are a GmbH, then definitively your shareholders have a special relationship to you. So, if you sell a car for a reduced price to your shareholder, then 10.5 says, please test me. Yeah. Shareholders are even explicitly mentioned in the law. So, if you are a sole trader and you sell a car with a value of 50,000 to a family member, 10.5 clearly is triggered. If you sell it to a friend, not a family member, that friend is also closely related because, well, friend, if you make a special price, not as a marketing measure, naturally a trader always makes a special price and treats everybody as a friend. However, if that really is a friendship price, lower than usual, then the price deviates from market conditions for personal reasons, so the minimum tax base has to be checked. Imagine you sell a car for 50,000 euro purchase price for an output price of 1 euro because the buyer is a friend whom you have seen a long time ago, or have not seen for a long time, but now he shows up and you remember that guy saved your life when you were 12 and he risked his own life at the occasion. So you want to be thankful, grateful, and naturally, so you tell him, please look around. Every car here, you can buy one car here. The price for you is always 1 euro for one car. Please, not for all. Huh? In that case, it would be clearly evident that the price has been set for personal reasons. So you test the net price would be 84 cents and the minimum tax base would be higher. So that in the end, the VAT is calculated on the basis of the 50,000 purchase price at the moment. However, what happens if we have market conform behavior? You are a car trader again and you think you give a huge discount to an important customer because that customer has already bought for his firm 10 cars during last year, and so you want to show some gratitude. In that case, the price deviation downwards is here motivated by business considerations. A customer, good customer, or bad customer. A customer is not in itself automatically a closely related person. Here we have business considerations. I must be nice to that customer because that customer brings turnover. So that is not a case for the minimum tax base. Imagine also you produce cars of a certain brand and you want to make your cars popular and give them a certain image. So you follow a strategy that prominent persons and important persons in everyday life can purchase your cars with enormous discounts. Perhaps even, although that is probably forbidden, below purchase price. The idea is this way everybody will see in the course of the years that every intelligent person, every important person drives your car. So what you basically do is you educate all the public that they see in the course of time that if they want to be important and prominent, their status requires to buy your car and not a car with a different brand. In that case, naturally, this is not a personal favor done to these people, but it's a business strategy. So there will be no correction of that price. By the way, why? The answer is, well, it's in the well understood in self-interest of the fiscal authorities and the law to allow you that strategy, because Why do you run that strategy? The answer is because you expect if you behave this way, then in the long run, this will bring higher turnover to your enterprise. You will be able to sell more of your cars to important persons for high prices, because all the others naturally pay the full prices. So if the strategy has success and ends up in higher revenues for your enterprise, then in total it brings higher value-added tax revenue for the fisc. And that is why the fisc doesn't complain if that is a genuine business strategy. No? Then you can try. You can do the best strategies and they profit from it as you profit. So there they don't complain. Naturally, again, it's interesting for us if also that can be found in the Value-Added Tax Directive. The relevant rule is here Article 80. In order to prevent tax evasion or avoidance, you remember tax evasion is illegal, avoidance is legal loopholes. The member states may, which means they don't have to, but they can, may in any of the following cases take measures to make sure that in respect of the supply of goods or services involving family or other closely related personal ties, management, ownership, membership, financial or legal ties as defined by these member states. In that case, the taxable amount is then to be the open market value. Where the consideration is lower than the open market value and the recipient of the supply does not have the full right of deduction under the articles blah blah. So naturally, a minimum tax base would not matter if you sell something to a family member below price and the buyer is also somebody who buys for his enterprise and has full input tax deduction, because then if you sell for too low a price to the other part of to the other entrepreneur, then no damage is done because the whole tax revenue would only be temporary. You pay and the other gets a full refund, so you don't need to care about the exact amount. Where the consideration is lower than the open market value and supplier does not have full right of deduction under these and these and these, and the supply is subject to an exemption or so, then also things can be corrected. Or where the consideration is higher than the open market value and the supplier does not have a full right of deduction also, then things can be corrected. You can also take into account that an employer and an employee might have a close personal relationship, so giving advantages to employees and family members of employees also can qualify for the application of the minimum tax base. That makes sense because when you think about that, the minimum tax base is a countermeasure against avoiding the withdrawal taxation by setting a small price of €1 or €10. Then you remember the withdrawal taxation also takes part if I give things for free to my employees for their personal consume. Naturally, I could also try to avoid the application of that rule by selling things for €1 to my employees. So naturally, there's also the risk of abuse. And so then, for this reason, naturally, also the anti-abuse measure 10.5, the minimum tax base, must apply. Article 80 then says the member states can set conditions for these things, and the only thing they have to do is so that nobody loses the overview about which measures exist in which state, they have to inform the VAT committee of the EU about the national measures which they have taken in their national legislation. Okay. So imagine the first example here. The owner of a computer shop has bought several new computers for a purchase price of 1,000 net during the last month, and he sells them usually to customers for a price of 3,000 plus VAT. However, his son now can buy one of these computers for €500 and employees can buy them for 2,000. In that case, what would be the evaluation of the situation? Well, 500 would be the gross price for the deal with the son. So the net price is lower. We would have to compare with the minimum tax base. If we can assume that the repurchase price is still the same as before, then that would be 1,000, so 190 euro VAT would be due. The employees buy the computer for a price of 2,000. That is a net price which is a bit lower, so probably 1,680 or so approximately. The minimum tax base would be 1,000 in this case. So in that case, the consideration, the net price would be higher. So this would be the tax base. So basically, we always have to do with the higher of the two if we have a deal with a closely related person. And as you remember now, employees also are a part of that circle of persons. Another example, we have a computer shop. They acquired some computers 3 years ago for a price of 3,000 plus VAT. And initially these computers were offered to customers for a price of 5,000 net plus VAT. So that was all very nice. However, shortly afterwards appeared a new, better computer model. So these computers can now only be sold for a reduced price of 15,000 plus VAT. And if we were still ordering others of that model from a wholesaler, then the wholesale price would even have dropped down to 500 plus VAT. Now to an employee, the computer shop owner sells the stuff with a discount of 50% on his current price of 1,500. In that case, we would have a net price of 750 made to the employee. That is under 10.1 the tax base. However, as an employee is deemed to be one of the closely related persons, we check additionally the minimum tax base. Here, our case description says at the moment the repurchase price would be 500 net. That's lower than the net price agreed upon, so the 750 would qualify still as the tax base. Okay, so that's basically how it works. I hope that gave you an impression of when and how you need to use that minimum tax base rule additionally to the consideration under 10.1. And I think that's enough for this video. So enjoy a small break until we see each other again in the next video. Thank you very much for watching and goodbye.